There's been a lot of investors who are stopping their SIPs because of the ongoing market volatility. Are they doing something right? What is your opinion? And is there a strong case to urge them to continue with their SIPs and even add more perhaps when markets are down like this, Mr. Singh?
See, honestly speaking, when I started my journey of SIP, I never did it for 1 year or 2 years or 3 years. It is for a longer period of 5 years plus. And even if I took look at today, even after the markets going down, my SIP growth is still in the double digit. Still, my I'm having 13-14% return on my 5 year SIP. So why should I be worried about it? I mean, small time volatilities don't deter me from doing it. I have put it for long year. And anybody who is have a shorter period, I will again advise, please don't put in money in equity markets for 1 to 2 years.
Well, this is an annual ritual for me, and a ritual I really, really treasure and enjoy because Mr. P Singh, Deputy MD and Joint CEO at SBI Mutual Fund, is always very gracious, very graceful, and somebody whose head is full of ideas and gives us some very worthy pointers as far as mutual funds and investing is concerned. Remember, this is a gentleman who has over 3 decades of experience in the banking and financial services industry, and in his current role, he oversees all business verticals and segments of the organization. A seasoned professional in the mutual fund industry, he has spent over 25 years with just SBI Mutual Fund, where he has held numerous senior leadership positions. Great to see you. How are you, sir?
Very nice. Thank you, Rishi. Thanks a lot for having me again on the show. Thanks a lot. Always a pleasure.
You know, these are exciting times. You've launched the Jan Nivesh SIP. Is it the Jan Dhan moment for you in the entire mutual fund industry? Because lots of excitement. You know, you have the coin phrase democratize wealth creation. So I'd like to start this interview by you talking about this wonderful Jan Nivesh SIP.
Thank you, Rishi. First and foremost, this is not only exciting time, this is challenging time also for the markets. Markets are in the correction mode. And in one way, we are happy that we are coming out with this Jan Dhan moment of the investment part, which is called Jan Nivesh at a time when market is corrected and we are getting the people at a right kind of valuations. The basic idea of this was there in mind for a long time, and we have aligned our passion when we were very happy when we came to know that the SEBI chairperson, Madam Madhvi Puri Butch, is also very passionate about it. So we just aligned our idea, our aspiration with her aspiration, and happy that we came out with this. We have just launched it, but we have to make it happen in a big way. Like the Jan Dhan movement, it was in a mission mode. There were 26 crore bank accounts were opened, 26 crores. But if we have to match that kind of number to come in Nivesh, we have to now we have just launched it. We have to make it a mission statement, and we have to go all out, create a journey. We have already got all the enablers there. Now, God willing, we'll be very much be having the Chandan moment of the investment journey in this.
What Sir is talking about is Madhvi Puri Butch ji, chairperson of SEBI, and Mr. Shetty, chairman of State Bank of India, coming together and unveiling the Jan Nivesh SIP. It's basically designed to enable first-time investors and small savers from rural, semi-urban and urban regions to invest, and thereby promoting financial inclusion. I believe the flexible SIP options start at just 250 rupees, which I think is fantastic. Talk to us about that.
It's not only 250 rupees, but it's the daily option also. Because in our country, there are huge number of people who are having the good cash flows on daily basis, and with the fintech journey of through UPI and so many places, people are having money in their account, and this formal money which is coming into the bank accounts to be brought into the capital market is the mission, so that India is no more a capital scarce country. We have capital being put in by the small investors in the country. And the idea, and one more thing we have done, we have started this only with one fund which is relatively much safer, the balance advantage fund. So wherein fund manager takes a call, as per the market conditions, how much to be put in equity, how much to be put in debt, how much to be put in any other asset class, depending. So the responsibility of an individual, because we cannot expect an individual who is putting in 250 rupees weekly, monthly, or daily to be a financial wizard. Taking that responsibility on our shoulders, we are going to create wealth for them in an aggregated manner. And that's an absolute honest mission to get more and more people of the country, more and more citizens of the country participating in the growth journey of the country, which we are in at the moment.
Well, like you said, Mr. DP Singh, that you have actually lowered the entry barrier. The other
Yeah.
thing that you have done very beautifully is you have leveraged digital platforms, because the idea is obviously to attract first time investors. So I believe this facility will not only be available on the SBI YONO platform, but also other fintech platforms. Would you tell us about a few of the other fintech platforms that investors can easily access and manage their investments?
Honestly, it will be available on all the fintech platforms going forward. But to start with, we have done it with Paytm, we have done with Zerodha, we have done with Groww. We are in process of being there on Paytm, Angel One, so on and so forth. So this is just a matter of time. This will be available everywhere. But today, it is available on Paytm, Yono, Zerodha, and Groww.
Do you feel that the unorganized sector workers, Mr. Singh, self employed individuals, small savers in the unorganized sector, they can benefit from the simplicity and flexibility of JanNivesh SIP?
Absolutely. This is basically the target audience is that only the people who are not into this thing, and how are the only gap between what we have announced, what we have executed, and the execution is to find feet on street who can get it happen, make it happen. And we are working on that on a simple tool wherein someone can do it. And I don't know, I mean, most of the people may not be aware that any investment up to 50,000 rupees, there's a system of very simple KYC only on the basis of Aadhaar, and their PAN is not required. So we are going to that till the time they reach 50,000, which of course we have requested the regulator to make it 2 lakhs, 50,000 to 2 lakhs, which in principle they have said they will consider it. And I wish that will be taken because the huge number of people can join in this journey. That's there, but it's just a matter of time. I mean, when I'm saying matter of time, it means a few days or 2 3 weeks, and this journey will be available on each and every fintech platform of the country.
Lovely. So, this initiative aligns with the vision and commitment of the Government of India, State Bank of India, and SBI Mutual Fund towards financial inclusion and empowering small savers to invest for their financial goals. Now, I want to continue on SIPs. You started this interview by saying slightly troubled times, volatile times. There's been a lot of investors who are stopping their SIPs because of the ongoing market volatility. Are they doing something right? What is your opinion? And is there a strong case to urge them to continue with their SIPs and even add more perhaps when markets are down like this, Mr. Singh?
No, that exactly is how we are educating people, and that's what we are practicing. If I take my own example, I have doubled my SIP amount at this point of time. Because why so? Because the market is becoming cheaper, relatively cheaper. And while I saying so, am I saying that this has gone the bottom? The answer is no. It can go further down also, but on every, and nobody can see actually time the market. And if I'm getting more units at the lower price, this will bring down my average cost down. So I will be very happy increasing my money to double from the whatever my existing amount is, or whatever I can do, I will do that. Because see, honestly speaking, when I started my journey of SAP, I never did it for 1 year or 2 year or 3 year. It is the for a longer period of 5 years plus. And even if I took look at today, even after the markets going down, my SIP growth is still in the double digit. So I should this whatever I saw was a notional growth. Still, my I'm having 13-14% return on my 5 year SIP. So I why should I be worried about it? I mean, small time volatilities don't deter me from doing it. I have put it for long year, and anybody who is have a shorter period, I will again advise, please don't put in money in equity markets for 1 to 2 years. If you want to do that, come into conservative hybrid, come into multi-asset allocation. But if you are starting your journey, don't go beyond balance advantage. Balance advantage should be, in your case, must be the most aggressive if you are starting for the first time and you are the small investors. So that's where we breathe, eat, dream only one thing, that is the investor centricity. How to have more and more number of satisfied investors. In short term, I can have more number of investors, more number of money, but that is not going to be good for my business, not good for Indian citizens. So that's something we have a huge responsibility on our shoulders, being the largest in the country, being having the SBI tag with us. So we walk the talk. We'll continue to do that.
That's wonderful. Your recent multimedia investor awareness campaign on multi-asset allocation funds.
Yeah,
I want to know why this category of funds particularly. Your campaign says, and I quote, any time is a good time for a multi-asset allocation fund.
yeah.
Now, Mr. Singh, does this mean that this is an all-season fund? Any type of investor at any stage of their life can look to benefit from these funds? Please explain these funds to us.
Yeah, of course. The only difference in this is, I will just try to specify. Any time is good time. If your time horizon is more than 1 to 2 years, it's not a 1 month, 2 month, 3 month product. But as we all are aware, that different asset classes give returns in the different business cycles. Sometimes equities are doing better, sometimes commodities are doing better, sometimes fixed income is giving good return, because when there's a likelihood of interest rates coming down, so there will be some capital gains. So that's why we say, if any investment you are having for 2 years, multi-asset is best. Like last 1 year, if equities have given a negative return, gold has given 20% positive return. So it has balanced out. And the debt fund has given a coupon of 7 8%. So whatever is there, it's not getting into negative. Temporarily, can it not be negative? The answer is no, it can be negative temporarily. But multi-asset fund, they balance out. One or the other asset category will give you the return, and you are taking very, very less risk as far as the equity markets are concerned, because equities are always the high risk category. This can give you very good return, and this could be negative also. So multi-asset is one thing which is, in my view, if I have to put in my money, if I have got 3 years money, and rather than putting in FDR, I will put it here, because I have got full liquidity, I've got tax efficiency, I've got transparency. I can see where my money is being invested. So that's the way to go for any Indian investor, or for that matter, any global investor.
Any global investor too. But some might argue, hey, I already invest in fixed income funds. I already invest in equity diversified funds. I have some allocation in gold through ETFs. Do I still need to do a multi-asset allocation fund too, or should I can just like content with the others that I've done?
No, the issue is, when you are going through a fund, then whatever action is taken in the fund, the tax liability doesn't occur to an individual investor. Today, if I put in money in gold and I have made 20%, I book 20%, I have to pay tax on 20%. But if I'm in a fund, I have an allocation of 20% in gold and silver. Tomorrow I see that this cycle has achieved the target. I want to move from commodities to equities, and I sell in the fund. The individual doesn't have to pay even a single paisa as tax. His or her tax liability will occur only when he or she withdraws, redeems the money. So it doesn't have to bother. I can put in money for 2 months or 2 years or 3 months or 4 months. I will see the stock on this thing. And that's the biggest benefit for an investor, not to be worried about. All those responsibilities are left to the fund management entity and fund managers to take a call on his behalf. If you believe, if you trust, if you feel that the organization who is running the fund is credible and having good experience, just leave it to us. And at a very, very small fee, this all these services can be given, which is, of course, is extremely tax efficient. No, so that's something I will always say, rather than putting in one asset class separately, one the other separately, as per your question, then it's different in fixed income, different in gold, different in equity. That doesn't make sense. And it's some portion which I want to have liquid and where I want to withdraw at earlier than 5 years, 2 years. I think this is the fund to be. This is the category to be, to say
The
so.
category. Younger people, Gen Z and Gen Alpha's awareness and interest in mutual funds and investing, and the rise of the DIY, do it yourself investors, what I want to talk about. Do you think it's a metro city phenomenon only? Or satellite townships, B centers and C centers, also youngsters are saying, let's invest in mutual funds, but I'll DIY, I'll do it myself.
Yeah, yeah. The only thing is why it is more prevalent in the because it is now. Of course, it is going to the smaller cities because the peer group, whosoever is doing it, do it to yourself. They don't go to professional, but they do talk within their peer set, within the friends, within that thing. That the groups are bigger in metro, so that's why it is little more. But we have seen it's growing very very fast in smaller towns. Even the Gen Beta has come now, and recently, see, even Amphi has come out with an initiative where they will be going to schools and paying some money to the from our awareness fund to Gen Beta to start investing, so that once they become adults and they become little bigger, they should have the experience of investment journey and the types to come. So it's something very very important for them.
As usual, one lifestyle question before I say bye bye to you. Are you keeping a keen eye on the cricket? India beat Pakistan in the Champions Trophy.
Of
Now
course.
IPL is also coming up. Who's your favorite team that you support?
No. See, as far as of now, I'm looking at only this. Let's be champions again. That's the one thing I'm focusing on. But IPL, how it runs out, actually, you pick up your ideal team over after when it's midway, right? That's
Very
the
well said.
that,
Very well said. People get impulsive and intuitive in the very beginning, but in the later stages is when you actually should go for your
you
choices.
pick up your this thing because who is playing where, and because it's not on the team but it's the player which is more important, and how they're behaving. That's how it works. So I will not say anything on the IPL as of now, but still wishing, praying for India to be champions once again.
That's wonderful. So there you have it. Please go check it out. These are some wonderful, wonderful launches. The Jan Nivesh SIP, multi-asset allocation fund. Please get online, check out the website, check out social media, SBI Mutual Fund, and find out more details. Mr. DP Singh, always a pleasure talking to you. Have a wonderful day ahead, and see you soon, sir.
Thank you so much, Rishi. All the very best.
94.3 Radio 1.